Good evening, everyone, and thank you for joining us at this Your Overseas Home webinar. My name is Richard Way, and I'll be hosting this session. And today we're going to be focusing on financial considerations, including taxes, pensions, wealth management, financial planning when you buy a property, and more importantly, when you relocate to Portugal. It's great to have you all with us today. That's whether you're here now in the present, or maybe you're catching up on our demand on our recording on our website. And we're delighted to be able to help you realise your dream of buying a property in Portugal or moving there. So today we're going to have our session is about 30 minutes. And for those of you who are listening in live, there'll be lots of opportunity to ask questions to our panelist here today, which is Phil Morris from financial advisors Chase Buchanan. Don't be shy. If you have a question, please type it in the chat box on the side of your dashboard, and then I'll feed them to Phil, and hopefully we can all learn from each other's questions and the answers that Phil gives. He's very kindly given up his time today. He's an experienced financial advisor, lots of a wealth of knowledge and experience working in this field. I've just been talking to him, and he's been based around the world, and he's now been in Portugal for almost a year. So he's got lots of information to offer. If you do need a reminder of anything we've discussed today or want to share this with family and friends, feel free to send them to the recording on the website, or Your Overseas Home website, to watch at their leisure. So, Phil, delighted to be joined by you today from Chase Buchanan. And I know you've got a presentation. You're going to tell us about what you can offer, the services that you can offer, and introduce us to Chase Buchanan. And then after that, we'll take questions. So, Phil, over to you.
Thank you very much, Richard. And whether you're watching this live or indeed later on, if you're indeed joining us now, I'm glad I'm not competing directly with Pointless in the UK, which is so we've got plenty of listeners. Without further ado, I'll move to my first slide. Written in bold there at the top, quite kind of topical if you're at the, let's say, the kitchen table phase of considering a move, which is what I like to call it. If you're looking at the Iberian Peninsula as a whole, you might have come across wealth tax, which is definitely the situation in Spain. So number one point today, no wealth tax as such in Portugal. That's we do get asked that quite a lot. And so, a notable point of difference between the two countries. Secondly, Brexit's changed everything. No longer is it possible to sort of, have your feet in two canoes. You need to sort of properly consider the fact that you are leaving the UK, which is now deemed a third country. We're not all one happy EU family anymore, so there are restrictions that apply. Predominantly, what's caught people by surprise initially, and perhaps still to an extent, it's being felt because of COVID-19, and people haven't travelled particularly. Without any form of visa, you're restricted to a 90-day rule, whilst you're visiting the EU. So it is a little bit complex. It's not obvious. It's not stay here 90 days, stay in England or UK 90 days. It's what I call a look-back system. There are calculators online, Schengen calculators. You can put your trip dates in. But be wary of falling foul of those. You can't sort of come here and stay 3 months and think, I'll just stay another week. You may well get, problems at the border, or, when you're wishing to come back in, bear in mind, when you were actually visiting the EU before. And that includes all other countries. So all the Schengen area. So if you've had a holiday in France, Spain, or any other country, that all counts, even business trips. Next point, I guess, do plenty of research. And obviously we are on a webinar, and that's highly recommended because you're getting, the latest and very relevant information from people who are qualified to comment on, cross-border aspects of what you're intending to do. Be wary of outdated information on websites. Facebook groups are full of people who sometimes give you half a story, and there's lots of complications or restrictions that apply to individuals. So do that research before you come. You're looking at buying a property. Scouting trips or multiple thereof would obviously be important. Some people obviously considering Portugal may well have holidayed here for a number of years before they've decided to make it their home. So obviously a necessary part of what we're talking about today. And furthermore, while you're on these trips, perhaps try and sort of build a network and meet a few professionals that may be, assisting you in your overseas purchase. So, not limited to, but obvious ones are real estate agents, lawyers, accountants, and of course, your friendly financial advisors. We can be very useful because there are a number of considerations which I'll expand on as we go on through the session. So my point 7 there is, let's assume you've chosen your property, you've secured it, and you're going through the process of purchasing it. One thing then I would say is to get a NIF. If you've never heard of that, that's essentially your tax number, or it works a little bit like your national insurance number in the UK. And my top tip, or first, one of the first tips I'll mention is get the password. There's lots of people who'll help you get the NIF. You can get it online quite easily, but do get the password off whoever gets you that tax ID number, because it will significantly make it easier later on. You have to trust me on this, but just if there's a takeaway there, make sure you get the password sent to you as well. And whilst you're here, it's, I think, easier to get a Portuguese bank account open in person, face to face, if you haven't already done so. One or more of the major banks do have a sort of satellite branch in London, etc. But in some of the newer banks are offering online accounts. But I recommend whilst you're here, getting that Portuguese account open in person, just making a maybe small deposit. So moving on, let's talk about what you've got to face in terms of your property purchase. So I'm outlining here, some of all the taxes that apply, but obviously they are at varying bands. I'm not going to go into the bands here. This is just kind of a top level view of the sorts of taxes that would apply. So you've got, a range of them, and some of them vary by property value. Legal fees obviously vary a little bit depending on, who you use. Flat registration fee, and do bear in mind that there's no finder's fee as such. You may come across people, from a real estate sort of background that might try to extract commissions from you, etc. It shouldn't be necessary, and I would avoid those offers. All right, so we're looking at an average of 6%. That's the purchase tax to bear in mind when you're shopping, even if you're looking online, etc. If you bear that in mind. So next, we're thinking about preparing to leave the UK. So you may well own a property already. You might have a family home that has been with you for a long time. So you've got to obviously consider whether you are going to sell that, potentially rent it out. So selling it, if it has been your principal primary residence, should be or rather benefit from a relief of capital gains tax. If you can also obviously rent it out, bear in mind the costs of doing that. It also then becomes it is treated differently. It's no longer your primary residence anymore. So there will be some capital gains as a result of that. And circling back to my point about the Schengen rules, you want to stay here longer than 90 days, and you don't want to be, having to spend time elsewhere. You've got to now look at applying for one of these visas that will give you residency rights, so you can enjoy your new home. Again, lots and lots of information if you start looking on various websites regarding this. So I'm not going to go into the detail, but again, top level sort of description would be the D7, which is the most common one. So this assumes that you have some passive income, and that's for many people a UK pension or investment that's giving you a regular income. You are allowed to work on that visa, but what's happening a lot at the moment is we're seeing people who are obviously sat in Portugal working, but the employment income, if you like, is coming from overseas. So that's fine. If you want to do some kind of business inside Portugal, you'd be looking more towards the D2, and sometimes known as the entrepreneur's visa. If you actually want to carry out work, let's say on Portuguese soil, you need to be thinking about D2. Golden visa as well appears a lot, on internet searches. It's been very successful is the key point here, and as a result, the Portuguese have restricted it a little bit. Some of the more popular and more densely populated areas are no longer within that golden visa regime. So that the Portuguese government now are trying to encourage people to develop and live and populate in less densely populated areas. So don't automatically assume that the property you see will be eligible for that golden visa route, which historically has been somewhat attractive and easier to obtain. The other point is that you can't just sort of come on a tourist 90 days and then walk into the town hall here and say, I'm now resident because I bought a house. That used to be the case again, pre-Brexit or, pre-January 2021. So you need to apply in your home country. Let's assume, we're talking about the UK. So there's various visa processing points, London, I think Manchester, and I think there's one in Edinburgh. I'm not 100% sure now I've said that. But yeah, you need to submit all your information in London and sit and wait for that visa to be granted. That allows you an initial 120 days and gives you an appointment with the Portuguese immigration here, where they'll record your biometrics and fingerprints and things like that, and then give you a nice digital residency card, so that you've got free movement back and forth. You're no longer restricted to that travel days, etc. But yeah, just as a rule of thumb there, you really want to be thinking about allowing 6 months for all this. Better allow 6 months, and if it happens quicker, then all good. But don't assume. I've spoken to several people who have just, I'm coming to Portugal. I've sold my house. And I'm coming next week. You need to sort of take time to follow these steps. To avoid headaches and complications, or not being able to live how you want to live in the immediate future. A couple of just points there. Obviously get a quote for removals if you're bringing furniture, house contents, etc. Algarve removals come highly recommended. You'll see, if you ask on a Facebook group, for example, they'll typically come up quite a lot. And obviously we're dealing with a foreign currency. Things like Revolut are handy for smaller amounts, but if you're really, for instance, buying a property, it could really benefit you to involve a professional. Sterling has been quite volatile of late. It's actually lost some ground recently. But professionals, again, such as Smart Currency, other Forex professionals are available. But we found Smart Currency to be very good and very professional and help people save money on foreign exchanges. Let's think about some of the other considerations from a financial perspective. UK capital gains tax. You will escape some, specifically once you have been outside the UK for 5 clear tax years. You typically are getting out of the UK capital gains regime, which can be very useful. Next, pensions, and I've put an NB there, nota bene. So it's quite some change to pensions, and that warrants a slide of its own. So that's I'm going to expand on that shortly. A key takeaway next, which is the wonderful, UK tax efficient savings wrappers such as ISAs and PEPs. Some types of bonds will not be compliant here. Portugal takes a hammer and smashes right through them, and the benefits that are afforded to you in the UK are no longer applicable. And historically, people have been rather lazy about this and thinking that no one will know, and perhaps continue to contribute to ISAs and perhaps not declared growth on them, things like that. Be wary of that, and be wary of, things might appear a little bit sleepy whilst you're accumulating inside the ISA, but when you go to take money out later on, that's when it could all come down on you like a pack of cards, and questions asked about where you're resident, etc. So do consider making changes there. Definitely consider moving to Portuguese compliant wrappers. They do exist. You're not able to sort of buy them on the internet and download forms and get them. You do need to speak to a professional, such as myself or any one of the other qualified advisors here at Chase Buchanan. And we'd recommend you do that within the first 24 months. There is a reason for that. I'm going to come on to that shortly as well. UK state pension we get asked a lot about. Take a couple of steps and a couple of online forms that can be paid out to you gross without any UK withholding tax. And a little sort of tick item there, get a UK will if you don't have one. Typically, you would exclude Portuguese assets from the will, and you can make a separate Portuguese will to handle anything that you accumulate over in this side. So, the reason why you should have a chat with us in the first 24 months is because, and this is another thing that you'll probably come up with on the internet about Portugal, something quite unique to Portugal. It's called the NHR, and non-habitual regime. It's a kind of like a tax holiday, if you like, to welcome you. It applies for the first 10 years, and you can apply for it, or you need to apply for it before the end of March on your first full year of residency. It means that pensions are taxed foreign. This is foreign pensions that you've obviously, with the help of your advisor, getting paid gross, so without any UK taxes on them. But there's just a flat rate here of 10% on foreign pensions. Other foreign income is typically at zero. It's deemed tax paid. If it's under paid from a country with a DTA with Portugal, which UK certainly does. Rental incomes, nothing more to pay here. There will be something in the UK that I think around, it's usually 10% there for the UK side. But you can take steps to get that gross and submit a tax return, so there may be some savings. Dividends, zero. Royalties, zero. If any of you have managed to become a successful author or written music or invented something, then all that's at zero. And just a caveat on the income, and that is that if you do work here in Portugal and you're earning money that's paid to you in Portugal, then that is a flat 20% under the NHR. The point is it's 10 years. So what do you do about year 11? If you establish the Portuguese compliant investment vehicle, that can soften the blow and typically keep your taxes under 11.5% for the rest of your life. And that can kick in from year 8 of having the Portuguese compliant vehicle or wrapper in place. Here's the specific detail on pensions because it warrants it. I mentioned, the flat rate of 10% on income, but another sort of top takeaway here would be that the UK again grant you the first 25% of drawdown of a pension for those of you who have reached 55 and above. So you can take 25% of that tax-free whilst in the UK, which is a very, very useful benefit, obviously. But that's a UK rule. It's not a Portuguese rule. So if you hadn't taken that money, Portuguese tax authorities would want to see the tax at 10% or more if you weren't under the NHR. So, do take that. If you might say, well, I don't need the money. Again, that can be put into the Portuguese compliant vehicle or obviously used towards your Portuguese property. Cure-ups might not mean anything to some of you, but again, if you've looked at overseas pensions, it might come up a lot on the web. There's a reason for that. It used to be the absolute go-to thing to do to get your pension out of the UK to move it to Europe. There was or is a number of advantages for doing that. However, as recently as, let's say, last Christmas, Richie Sunak made some comments. He didn't change the law, but he made some comments that irked a great many of the pension trustees in the UK. And the rules are now not clear. And it's in flux at the moment exactly as to, what will be the outcome regarding the possibility of, moving the pension to Europe. However, it's a much more prudent thing to do at the moment is to consider an international SIP. It stays in the UK, but it's got kind of the left-hand drive element of a UK pension and some very useful sort of features to it. It's different from a normal UK SIP or a self-managed SIP. It has some good features. It can be useful, obviously, if you're to consolidate a number of pension pots that you've perhaps accumulated from old employers or existing private personal plans. And more importantly, you can actually see and get your portfolio growing rather than being just a number of a pension scheme, a massive pension scheme, and being in a big sort of homogenous multi-asset fund that you really don't know how it's performing from one year to the next. Really you've got a chance to get a professional portfolio management strategy in place. Again, do come and see us at Chase Buchanan, because that's what we are exceptional at. That is something that is our USP, if you like. The other feature of an international SIP is, of course, currency planning. And, I've mentioned that sterling's been volatile. It's weakened against the euro at the moment. So what you are able to do is keep wallets of different currencies in an international SIP, and you can sort of, make sure that you've got enough cash there for the year, and you haven't got to worry about what's happening to the pound back in the old home country. You've gone through all that. You've met your professionals. If you haven't met them all face to face, you've had a chance now. It's the same as the UK now. It's all mask free, and all everyone's having face to face meetings again and getting used to the fact that we're actually able to talk face to face, which is absolutely fantastic for people like me. But obviously, you can get to see the whites of their eyes, and if you're dealing with Portuguese professionals, perhaps it's a little bit easier. They very much are a warm and friendly nation, and like human contact rather than emails and WhatsApp messages, etc. So that you've got the benefit of that. I have touched on this point. The NHR, it's a wonderful thing, but you need to get organised and get your application in before that March the 31st, and that is accessed by the tax portal, and that's why I mentioned at the beginning, make sure you get the password for that tax portal, because I know people who've had awful problems getting hold of it because they can't even remember who helped them get the tax ID in the first place. Then you're going to apply for SNS or indeed an additional sort of top-up private health policy. Hospitals here are great, but and people have had good experiences with the SNS, which is kind of the NHS. But you might want to sort of, it's not particularly expensive. It's a lot lower cost than other countries that I've lived in. And apply SPF. Now that isn't a Portuguese government department or an acronym for any kind of tax. That is the sun cream that you're going to need, because we've got a hell of a lot of sunshine here. Maybe get yourself some really good sunglasses in England, because here's another little thing. Glasses are cheaper in England, so there's a couple of bits there. Other little items on the tick list: the P85 and the Form DT. That's telling the UK that you're no longer tax resident. You can do those online on the .gov website. Portuguese compliant portfolio bond. So that's the compliant wrapper that is in a whitelisted jurisdiction that is very, very useful sort of bit of planning, so that year 11, when NHR falls away, you haven't got a big sort of cold bath in terms of what you're having to pay out in terms of taxation. The UK non-resident landlord is another little form you can fill in, give it to your letting agent if you're letting out a property. That'll mean that the letting agent does not have to withhold 10% tax, and you can fill out a tax return and make sure that you're getting allowances, particularly at the beginning when you've supplied furniture and things like that, which can be offset. You will ultimately have to trade in your UK driving license. So I've also mentioned here the UK statutory residence test. This ties back into the capital gains tax. Being 5 years clear out of the UK tax regime is good, because then things that might attract capital gains in the UK, you wouldn't have any, basically. You just need to be mindful of this test, because if you spend too much time back in the UK, you might trigger a UK tax residency again, and you don't want that. So particularly in the first couple of years, it's quite, how shall I say, complex in a way, beyond the scope of today's session. But have a look at that. Mentioned UK will already, and another little tick list item, maybe get LPA, lasting power of attorney, done. And car, cars are more expensive here. I don't know quite why, although they are definitely taxed at a far higher level. You do have a special dispensation to bring one car in during your first year of residency, free of this tax, and it can be very very attractive to do it. You need to have owned that car for 6 months, and obviously, you can acquire left-hand drive cars in the UK, but again, you've got the look back of 6 months. They want to see that you've owned it, ideally whilst you've been resident in the UK, but you can save yourself some money. They're looking for, they're quite picky on certain cars, classic cars, no problem. But if it's a family car, it needs to be a standard production model with no sort of bells and whistles and extra lamps added. It needs to be a very, very sort of homogeneous production version of your vehicle. Okay. So that's really it. So that's a summary, really, is getting ready to leave. Hopefully I provided some useful pointers on that. Replanting here, you are going to come up against is a bit strong, but you're moving countries, and I don't know, we've never dealt with the UK immigration system, right? Because we're born there, but you will come up against government immigration and departments and bureaucracy and things like that, and it's just a case of smiling and grinning at it, and then getting over it. And time and patience. No point getting stressed out about it or upset or frustrated. Portugal's definitely worth it, and when you've got through it, there's plenty of time to relax for sure and enjoy everything that Portugal offers. So that last point really is get professionals to do the legwork and choose wisely. If you want to contact me or one of my colleagues, we've obviously built up quite a strong network of people that we know and trust, that is, say, outside the scope of what we are doing on a daily basis. So some of the professionals that we deal with on a personal basis and we refer clients to, could be a useful point of contact for you. So do feel free to get in touch. So that's about me, Richard. I don't know if there's any questions come in. I can't.
No, there have been questions. Yes. No, that's very comprehensive. Thank you very much, Phil. I'm going to try and group some of them because we have used up most of the time, but we've got time to cover them. There's been quite a few questions on pensions from the UK or actually US, but pensions that are taxed at source. What happens with these? You won't get taxed twice, I guess, is the main thing. The other thing is there are some types of pension. There's someone here who mentioned they have a military pension or other benefits, I guess, that aren't taxable in the UK. When you bring them to Portugal, do they then get taxed, or do you keep that non-taxable benefit? And also maybe just mention, because some government pensions are taxed at source and some aren't. So
right.
What happens in those situations?
Yeah. So not a lot you can do. We've already sort of identified that some government departments will tax at source. There is, again, if we're talking about the UK, and most other major sort of Western countries have got a double taxation agreement. So if the tax amount was larger in Portugal, you would be able to offset what you've already paid. But when it's the flip side, there's no reclaim to possible, really. As far as I'm aware, it is what it is. There's nothing you can do. Yeah.
And if you do have a benefit or a type of pension that isn't taxable or isn't liable to taxation, do you carry that benefit to Portugal? How do they view it? Is it still seen as a type of income?
Yeah. So do we mean? Well, there's lots of different benefits. So potentially sort of a disabled benefit or
disability pension. So disability pension, it's called.
Yeah. So I think that would be able to be paid on a gross basis. Yeah. And Portugal wouldn't seek to attach any additional tax to that. Certainly, to the best of my knowledge, if that particular person is asked that question, I can look at it in detail.
Yeah.
If they would be happy to email in. But yeah, that's my thinking at the moment.
Do we know which types of government or civil servant pensions are taxed at source? Someone's asking if NHS pensions are. Do you know?
Nurses, I believe, and NHS are able to get it paid gross.
Yeah.
Okay, but the military, fire, police. I'm not sure about this question, to be honest. So
something you need to look at.
Better me check it out. I'm happy to get back to you guys, or if
no problem.
Whatever way is best. You can email me directly. I'll give them a concise answer when I know the exact detail.
Okay. Okay, there's been some other questions about people buying second homes, holiday homes, remaining a resident in the UK, but buying second home in Portugal. They rent it out in Portugal to holiday makers. They're going to be liable for tax in Portugal. Yeah. And how do they file their return? What's the process?
So I would definitely use services of a Portuguese accountant for that. There's a couple of regimes that are applicable, but if they have in mind the sort of 8 to 10% figure, then that would be a reasonable consideration. There's a couple of regimes, because what's become very popular is obviously to take the Airbnb model, or I think Booking.com. You just sort of give them your property and let it out, block the couple of weeks that you want to be there. The fees vary. So there's kind of like a fixed blanket rate that you can pay, or you can get into the nitty gritty, if you like, and start applying different reliefs for various items, whether it be advertising or cleaning, things like that. But yeah, there's a couple of regimes that apply, but I reckon around 8 to 10% is a fair number to keep in mind. Yeah.
Okay, great. Someone else asked if they're taxed. They've got a UK property income that's taxed in the UK. Will Portugal tax this also? Well, I guess not if it's under the NHR. Yeah.
Correct. Yeah, that's right. That's
okay. Right. And with rentals, do you need any type of license or anything to be able to do that? Someone's asked about just.
Yeah. There is now. If you want to rent your property as an official holiday let, it does need to be licensed. It's just one way of Portuguese, making sure that you're going to pay tax.
Yeah, getting you
on it.
registered.
So it's a registered property, and if it's unlicensed, and I'm not sure how big this department is, but if they start seeing a property that's advertised that is unlicensed, then you can guess who they're going to come after, right?
Yeah.
So they are getting hotter on that. On that aspect, because it's it can be very lucrative here in Portugal, and Portugal wants its share, if you like.
Okay. Just looking at some, you should be able to answer these ones reasonably quickly. Is the golden visa going to be scrapped? The EU have been putting pressure on Portugal. Is that right?
Yeah,
I know they've kind of fine tuned it a bit, haven't they? But is it got much longevity, do you think?
I think, Portugal are obviously going to defend it because it's been so successful for them. And there's other countries that do have it. Greece is another. But yeah, there's a whole rhetoric, in discussion with the EU right now, that wants to get rid of these kind of schemes, residency by investment, in all its forms. We've had, the typical examples of, Russian oligarchs obtaining residency by investment. So this has helped move it to the forefront of discussion. I think I can't answer that categorically. Portugal's choked it back, as I say, because it wants to try and populate and get people to invest in a slightly less densely populated areas, perhaps certainly nearer the coast. So it wants to get more investment inland, but it's got obviously interest to defend that, and I don't think they're going to sort of kowtow to the people in Brussels immediately. So I don't know how long, but there's nothing to say it's going to end imminently.
I mean, is it not the case as well that most people, your typical early retirees or retirees moving to Portugal, the D7 actually is going to be probably most suitable? I mean, the golden visa's had a lot of publicity, but actually it's quite not niche, but it's a particular type of, almost like a transient entrepreneur who doesn't need to spend a lot of time in Portugal. But it's as much about getting residency status as actually wanting to spend a lot of time in Portugal.
Right. Yeah.
Whereas the D7 is more about you want to move to Portugal and have a good, for a good. So actually, the D7 is probably going to be
yeah, exactly that. It's D7's sort of default strategy now. Golden visa is attractive to people who want to sort of obtain another nationality, if you like, because you can move to passport within 5 years.
Yeah.
So you can obtain an EU passport, which is obviously attractive as well. You can do that both with the D7 and the golden visa. The golden visa means you don't have to spend a lot of time here. I think a lot of people listening to this want to spend as much time as possible in Portugal. So yeah, the golden visa it's sort of fast track to almost citizenship, and it meant you could bring your family, you could attach your family to it. So it was really a sort of parachute in method.
Yeah.
But yeah, the D7 is the one at the moment to go for, and it's not too, what's the word, troublesome, to do it. We just got to do it outside of Portugal. That's the thing. You've got to do it from your home country.
Sure.
At the moment.
Great. We've got a few quick queries about, I'm guessing these are American USA citizens, and they're asking, you can help USA citizens. I mean, effectively, they have the same status as UK citizens now, haven't they? So
we are indeed. Yeah, we're a third country. UK is the same as US, Canadians. There's a lot of Canadians here, especially during the winter. South Africans. So yeah, we're all third country citizens. With regard to US nationals, in terms of investments, there's definite restrictions, and it's a very specialist area. Chase Buchanan does have an American license and US licensed advisors. And, again, wrong for me to expand on that. So best thing is for them to get in touch and get a Zoom arranged with my colleague who's a US specialist, and make sure that they get into compliant investments so that they don't get into trouble and complications when they get here.
Okay, brilliant. We're well over time, but just two final questions, if I can, hopefully short answers. The 90-day rule for non-residents, is it right that there's a way you can extend your stay if you don't want to become a resident, so you can get it extended for up to 180 days? Someone's asking that. Would it be a type of tourist visa or something? I don't know.
Okay. My short answer is no.
Yeah.
All right. There were various sort of allowances during the great pandemic, which hopefully is behind us. There were extensions granted, for everybody because everything was closed and difficult to travel, etc. But I would say no, not to my knowledge, and there may be extenuating circumstances for individuals, but as a short answer, no. That's what you need to be careful of.
There's something in the news about Portugal making it easier for UK travellers. Oh, this is to do with passports, wasn't it? Yeah.
Yeah. That's right. I mean, we've got one of the oldest alliances, in history between the Brits and the Portuguese. They want us to come. They don't want barriers up. They're sorry to see us leave the EU. So yeah, there's e-gates now in the airports. The system's being fully rolled out, and hopefully it should be smoother and less queues when you get off your plane. And as far as I know, it's the only EU country that's welcoming Brits with such open arms. But yeah, it's good to see.
Very considerate, yeah. And the final question is there a month that is, or is there a time of the year or best month to move to Portugal if you're planning things in terms of tax? Does it make a difference when you move or become a tax resident, I suppose, in Portugal?
There could be lots of
because you can move to Portugal before you become a tax resident there, can't you? You can be there for a certain amount of time. Yeah. And then you have to be a tax resident after whatever 183 days.
I mean, I would say, obviously the tax year here runs like it does in most of the other rest of the world, which is end of December.
Personal circumstances.
So we're end of March in the UK. So you could, if you've got things, it depends on what you're doing and your circumstances. If you're trying to do things inside the UK before you leave, then you might need that extra time before you officially become tax resident here, which would be when you take up your residency or spend at least 183 days here. So again, I'd want to see the individual circumstances to really answer that properly. There's no sort of go-to arrive in April kind of thing to my mind. I think it depends on what you're planning to do.
Fair enough. That's a good answer. Thank you very much. So obviously everyone listening, if they can come and talk to you either by Zoom or if they're out in Portugal, go to your offices and meet with you face to face. How long before their planned move should they be talking to you about pensions and financial planning?
We have conversations with people who are, I don't know, a year away, 6 months away. I welcome any conversation with anybody at any stage. I mean, we've got plenty of people. I think I sort of touched on this at the beginning, that are maybe weighing Portugal up with another country,
right?
Spain, France, etc. They're welcome to contact us at any point, really. I mean, to give you a categorical answer, when I'd like to speak to somebody really is within, the 12 months prior. You've made a decision, your target date, count back 12 months. That would be great. 6 months, good. But having said that, definitely within the first 24 months of being here, I've met people who have been here 10 years. They've kept their relationship with their UK advisor just because, they've known them for that, a long time. They trusted, they built up the trust. The problem is now, that UK advisors can't really look after, a Portuguese resident. And in this particular example, they don't have an idea of what's compliant here versus the UK. So it's really sort of prudent. I'm not saying you have to give up your UK relationship, but the FCA, which governs us, is slowly sort of within the next few years is going to say that if you've got clients, to a UK advisor, if you've got clients who are living outside the UK, you really shouldn't be advising them. This is the case. So definitely as early as possible. That's the short answer. Sorry, I've probably gone on a bit too long.
So don't miss the chance. Get in touch with Chase Buchanan and so much information, and make the right decisions early on, because it's a lot harder to put it right further down the line.
This is true. Yeah.
Brilliant. Thank you very much, Phil, for sharing your time and offering all your information and answering questions, and your presentation, of course. Like I said, we recommend you do contact them before you move to Portugal, and talk through your plans and get everything you need in place. Thank you very much to the viewers for watching this evening. Wish you best of luck with your plans to buy or move to Portugal. We've got other resources available from Your Overseas Home to help you with your buying experience, your buying journey, or with guides and other recordings, webinar sessions that you'll find on the website. So please do use those. And otherwise, that's it from us. Enjoy the rest of your evening. Make use of Phil and his team at Chase Buchanan, and hope to see you again on our other webinars. Thank you very much, Phil. Enjoy your evening in Portugal. Thank you.
Pleasure. Thanks, Richard. Bye-bye, everyone.
Cheers. Bye.